Welcome to Accitron Consulting. In today's world of fast-paced markets, growing data complexity and unpredictable risk, traditional computing methods are reaching their limits. You agree with me? But what if there was a way you could reimagine how we process financial data? What if we could run complex simulations, optimize investment portfolios, and assess risk exposure in ways that were once thought impossible? This is the promise of quantum computing. It is a revolutionary leap that is beginning to transform the world of finance. In this part of our series, we will introduce you to the foundations of quantum computing and show how it is poised to change everything from algorithmic trading to credit risk modeling. And that will of course enhance risk management. One thing that is not debatable today, it is the presence of risk everywhere, especially for financial services sector. So, get ready to explore the future of smarter investment and risk management. And that is where quantum speed will meet financial strategy. All of them must be going sort of in a parallel form, and at the same time going with speed because risk is not waiting for anyone. Let's begin. So the question is, what is quantum computing? In a very simple way, we say quantum computing has to do with you just imagining a super powerful computer that can process huge amount of information at the same time. That is basically what we call quantum computing. It is super powerful and it has the ability to process huge amount of information at the same time. Take note, at the same time, because of its enormous ability to process information. So how is it different from regular computers, you may ask? Well, look at regular computer. A regular computer uses bits to process information, and these bits can only be 0 or 1 at a time. It cannot be the two. But quantum computer uses qubits, though it uses the same 0 and 1, but it has the ability to use both 0 and 1 simultaneously at the same time. This enables quantum computers to process vast amount of information very faster, and significantly faster at that, than the conventional or the traditional computers or the regular computers that we are using now. You can think of quantum computer like a library. So imagine a library, for instance, you have millions of books there, they are stacked on the shelves. And so if you compare that to a regular computer will look through the books one by one. After picking the first one, you look at the second one, you look at the third one. So it can actually conveniently tell you that on this shelf you have the history of finance, on this side you have um, um, risk analysis. This is a book on risk analysis. This is a book on options pricing. This is a book on probability theory. This is a book on credit management, one after the other. But a quantum computer going through the same library containing millions of books can look at those books at the same time and tell you what they are. So if you want to know what you have in this place, it's going to tell you everything that is there at once without saying, please wait for me, let me look at this side, let me look at this side. That is just how to picture what a quantum computer is, and how fast, how convenient, how enormous its ability can be. But what does this mean for us? Well, what it means for us is that, in simple terms, a quantum computing is like a super fast, super smart computer that can help us to unravel or solve complex problems and make new discoveries. Although it is still a developing technology, yes, agreed, granted, but one thing that is very sure there is that it has the potential to change many areas of our lives, many areas where we do business. It has that ability to change those areas, very many of them. So it's gradually leading to a breakthrough in the fields of medicine, for instance, and finance and climate modeling. But our focus in this series will be on finance, with another focus on the financial services or the financial institutions generally. Now, let's look at some exciting applications, especially in finance. One, in the area of portfolio optimization. Imagine you have a portfolio of stocks, bonds, and other investments. A quantum computer can help optimize your portfolio by analyzing vast amounts of data and identifying the best combination of investments to maximize returns while minimizing risk. So it's not going to use the traditional approach in doing this, but it's going to use the super fast ability, the microprocessor, to get the information out. And so you can analyze a lot of investment. And come to think about it, nowadays we have investors going outside their own country to make investment in other jurisdictions. For instance, you can have someone in Africa or in Nigeria, for example, making investment in US stocks, making investment in Tokyo Stock Exchange, in the London Stock Exchange. If you're doing all of this, how do you manage them? How do you ensure your investment portfolio is optimized? Quantum computing will meet you just at the right point of your need. The other area is the risk analysis. Quantum computer can simulate complex financial scenarios. For example, it can simulate crashes in the market. It can simulate economic downturns, and that will help financial institutions to prepare for potential risk. So it means you are better able to anticipate risk and manage risk effectively if you embrace this new technology. And in the overall analysis, this can help you to make more informed decisions and reduce potential losses. And that is the ultimate of it. Another area that this groundbreaking technology is featuring is the area of option pricing. Quantum computers can quickly and accurately, take note, quickly and accurately calculate the prices of complex financial options. And that will enable traders and investors to make more informed decisions. If you are able to calculate the prices of options quickly and you're very accurate at doing it, then what is more, in fact, this is an area that everybody should even be happy for. because option pricing can be very, very difficult or very, very complex, and you need a technology that can help you manage it effectively. And not only managing it, it's going to accurately manage it, and it's going to do it quickly too, especially in a very volatile economy. And what is more, even option pricing, option trading itself, it operates in a volatile market. The market is very volatile. So you need accuracy and you need speed in that market. And that is exactly what quantum computing will help you to achieve. Now, let's look at the area of credit scoring. Credit scoring. The quantum computer can analyze vast amounts of data to help lenders make more accurate credit decisions. So if you are able to credit score your borrowers, however, no matter how many there are, you're able to do it accurately and you're able to do it quickly and you're able to do very large number of them, then you achieve better loan approval process. And then if you're able to achieve that, then you're able to reduce default rates. And if you're able to reduce default rate, ultimately you are able to reduce your losses or potential losses. This area, we are going to be dwelling so much on it in the next episode. The next area we are looking at quickly is the AML area, and that is the anti-money laundering and the KYC, know your customer. The quantum computer can help financial institutions to detect and prevent financial crimes. How? It's going to help them to analyze large data sets. And so you are able to identify suspicious transactions, suspicious patterns quickly. These days, transactions are becoming continental and intercontinental, and they can be very voluminous. We have so many ways of people or criminals facilitating money laundering, either by layering or by what have you. Now, in all of this, because of the interconnectedness of transactions and the volume of transactions that are connected, it becomes difficult for the traditional computers to manage this effectively. And especially when you need this information like yesterday, you need information quick. The quantum computers are just there to fill in the gap for you. So we can see that with these few areas that we have just mentioned, it's going to help us to appreciate how important and how welcoming attitude, let me say that, we should be towards quantum computing. We should welcome it. It's a technology we should welcome, and by now we're expecting financial institutions, for example, to begin to appoint maybe a quantum computing champion who will be on top of what is happening in that space and help his own organization to tap into the benefits of quantum computing. So can we now consider some examples to illustrate this application? Maybe one or two of them. For instance, you can picture a bank using a quantum computer to analyze market trends. Also, using it to analyze economic indicators with the ultimate aim of maximizing returns while minimizing risk. Or you look at a credit card company a credit card company wanting to detect potential fraudulent transactions. Aside from being a credit card company, financial institutions, fintechs, all of these today, they rely heavily on the use of card, either for making payments or generally for transacting businesses. And because of that, the issue of fraud cannot depart from them, so to say. So a quantum computer can assist them to analyze the vast amount of transactions that pass through their platform at any point in time and identify patterns and anomalies that may indicate fraud. And this can help the company to prevent losses and also protect customers. But I can hear somebody saying that when computers, ordinary computers, our traditional computers, the regular computers, when they came, we were told that they could also do this same thing. Data analytics, you use computer to facilitate data analytics, and they told us that it could also do this, identifying patterns and anomalies. The question is this, or the difference will be this: your regular computers can do this, but not as fast as quantum computers, one. And number two, it can also do it, but not handling so much volume at the same time, simultaneously, as the quantum computer. We'll go deeply into this in our future episode to really demonstrate to you how quantum computing can do this better than the regular computers that we have now. Thank you so much for watching this edition of Accitron Consulting's deep dive into the future of finance. But this is just the beginning. In our next episode, we are going to explore quantum computing for credit risk modeling, uncovering its powerful role in calculating expected credit losses and aligning with IFRS 9 standards. You will see how quantum techniques are not just fast, they are reshaping the core of financial risk assessment and reporting. So, if you are ready to stay ahead of the curve and lead with data-driven insight, subscribe, follow, and turn on notifications, and join us at the frontier where we are going to bring quantum innovation with finance strategy. Until next time, make sure you stay curious, stay bold, and stay future ready with Accitron Consulting. Bye for now.